Hello everyone and welcome back to another video. In today's video we will be discussing something a little different than usual. We're not going to be taking a look at, the short-term price action or doing some analysis on Bitcoin and looking at moving averages and bull market support bands and liquidity, fear and greed index and all of that stuff. In today's video I stumbled across something recently and I felt the need, I had the urge to actually make a video about this because this doesn't just concern those within cryptocurrency or within financial markets at all. This concerns the whole populace. Yeah. This is something that urgently needs to get addressed because I don't feel like individuals even within financial markets understand the impact of what I'm going to show you right now. Yeah, this is something that, especially those who hodl, and by hodl I mean hold your bags long term, and by long term I mean 10 years, 20 years, 30 years, 40 years. This is for the people, and I'd feel like they'd relate and understand to what I'm about to show you. But for those who freak out about some price actions here and there, Bitcoin might drop 20% and they freak out, etc. This is mainly going to be a long-term view on the market, and I'm going to explain the importance on investing whenever you can. A lot of people might say, oh, now's not the best time to invest, you need to invest now. I do agree to some extent. However, when you look at the bigger picture, yeah, the best time to invest is now. Yeah, and let me show you why. Let me show you why. We're firstly, this is the Bitcoin chart or all-time chart, but I want to show you the S&P 500 first because the S&P 500 is a financial market that has been around for near enough around 100 years, and I feel like you can properly see how it affects. Yeah, and we're going to be talking about inflation. So what we're going to do is that we're going to look at the S&P 500, yeah, and we'll just take it from the recent lows of 2009 because inflation has soared like no tomorrow since 2009 alone, yeah. In fact, for the S&P 500, let's actually take it from the lows of the tech bubble, yeah, because it's actually insane what I found, and just bear with me guys because allow me to explain it to you what I found. So if we take the lows of the tech bubble and we take it up to the highs of today, as the S&P 500 has been putting in all-time highs recently. So if we take a price increase, that is not correct. Let me just make this more accurate so we can get an accurate figure around this level right here. Bang. Okay, so since the lows of the tech bubble crash, yeah, the S&P 500 against the US dollar, because remember, when you invest with dollars, you invest with cash, you invest with fiat, you don't invest with anything else. So the S&P 500 against to what you're investing it with is up 527.92%. That's around a 6x or so, yeah? So since those lows of the tech bubble crash, the S&P 500 is up around 6.2x from the lows up until now, putting in all-time highs. Now look at this. Look at this because this is insane. If we take the S&P 500 and we divide it by the United States money supply, let's see what this looks like. You can see that I already had a look at this, but let's see what this looks like. So why are we choosing the US money supply? So the money supply is how much liquidity is in the system, how much cash is there, how much supply of money is there around the US, yeah? Because we all know about the problems with inflation, the prices of goods go up, etc. But when it comes to investing over time, this is a chart that a lot of individuals who hold long term may already know this, but they might not know it in depth detail like what I'm about to show you now. A lot of newbies will definitely not know about this, which is why you just need to invest and think long term. Do not think about or get shaken up by 10%, 20%, 30% move corrections, because I feel like we're going to enter a market now where we'll enter these situations where the prices will have significant pullbacks. But if we take a look at this, yeah, can you see that the S&P 500, when adjusted for the US money supply, hasn't even put in a new all-time high? We just checked the S&P 500, and the S&P 500 is putting in new all-time highs against the United States dollar. But when it is adjusted for inflation, all-time highs for the S&P is around that tech bubble. We're nowhere near that. In fact, let's take a comparison. And we took it from the lows of the tech bubble, yeah, which was this level right here. So, if we take the level right here, which is what we compared the S&P to the United States dollar, if we compare the lows of the tech bubble and compare it to where we are now, adjusted for inflation, the S&P 500 is only up 70% in comparison to the S&P against the United States dollar, which is up around 527%. So 527%. However, when adjusted for inflation, it is only up 70%. Now think about that for a second. Just think about that for a second. When adjusted for the true monetary supply, this means that your purchasing power obviously decreases over time when adjusted for the true inflation. Yeah, when adjusted for cash, it goes up and everyone gets happy. But the actual true value of your portfolio has indeed only gone up 70% since the late 2002s, 2003s, if you have been investing in the S&P 500. Now, if we actually just take a look at the S&P over time, we can clearly see that its all-time high is around here. But ever since 2007 or so, the S&P has just remained flat, completely flat. So for those who are investing, yeah, like your funds are going up, but your purchasing power is essentially remaining the same. You've been stuck in this box right here when adjusted for inflation. Now if we actually take a look back at the S&P 500 chart, just look at it. It's just been going up ever since. So yeah, you can say that, you know, you need to invest to battle inflation, but even when you are, like, you have to invest just to retain your purchasing power, which is crazy because people think you need to invest to make money. But it's gotten to the point now that the Feds have been printing so much money, you have to invest just to retain your purchasing power. It's ridiculous. If we take a look at Bitcoin, Bitcoin tells a similar story, but it's a lot better. Yeah, and let me show you why. So for Bitcoin USD, if you take it from the lows of 2015 and we compare it to where price is now, you can see that Bitcoin is up essentially 24,000%. Yeah, quite decent returns, right? Yeah, I know. So it's up around 24,000% against the US dollar. If we do the same and we do Bitcoin, if we do the same calculation, we do Bitcoin divided by United States money supply, you can see that the chart essentially looks the same. It essentially looks the same, right? You can still see that it has the same patterns. You know, you go on these bull runs, you go into a bear market, you go back into a bull run, go back into a bear market, and you go back into a bull run. The same occurs. If we take a look and compare to the lows of 2015 to where price is now, remember we said it was around 25,000%, right? So when adjusted for inflation, Bitcoin is only up 21,000%. So it is a decrease, which means that your true portfolio doesn't actually signify what it suggests if you did buy at the time, but it is significantly a lot better than the S&P 500. And I think that's why a lot of crypto enthusiasts or a lot of analysts out there have shifted their mindset over to crypto, because at least with Bitcoin, at least, I don't want to say crypto as a whole, because altcoins, they're just another story completely. We're going to be strictly talking about Bitcoin because the Bitcoin makes up the whole market, yeah? When comparing against other financial markets, you just want to solely be looking at Bitcoin. Because Bitcoin has stood the test of time. It was created in 2009. So if we're going to compare historical values, we're going to compare Bitcoin and not altcoins with other asset classes. But yeah, that's why I believe that a lot of enthusiasts and a lot of financial market analysts have shifted over their mindset to Bitcoin, at least, because at least with Bitcoin, not only do you retain your purchasing power, but the value of your purchasing power also increases with your investment. So yeah, I just want to share that information with you guys, because a lot of individuals may deem that Bitcoin is a volatile asset, and even though that is true, and the price of Bitcoin can decrease, 70-80% in bear markets, over the test of time, Bitcoin outperforms all other assets. And it has done so since its creation. And when adjusted for inflation, it still outperforms and looks relatively similar to what its chart against the US dollar looks like. So if you're a Bitcoin hodler, congratulations. Keep doing you, keep hodling, keep spot buying, keep holding in your secure wallet, because when adjusted for inflation, and inflation is essentially doing us over right now, just keep doing you, keep investing, keep hodling, keep spot buying, and in the next 20 or 30 years, you'll be glad that yes, you bought at 42,000 when in 6 months time the price could be at 30,000. It won't matter to you back then, because whether you buy at 30, 40 or 50k when the price is at $1 million, you'll be happy. Yeah, and that's my message for everyone today, especially for the normies, especially for the beginners. It's not about where you buy, it's about when you buy. Yeah, so that's it from me today, guys. I hope you all enjoyed the video. If you did, make sure you hit that like button, make sure you hit that subscribe button, and as always, it's been your boy J1 General. Thank you and goodbye.